Good day. Welcome to the IPO meet of QMS Medical Allied Services Limited. The company is engaged in the marketing and distribution of wide range of medical and healthcare devices and accessories. The company market and distribute this product to the various end users such as clinic, pharma companies, and medical companies, also individual users. The devices are sold directly in the brand name of the manufacturer and also own brand of QMS, that is Q devices. The company market and sell its product through the online and offline channels. The company has its two online portal, namely www.qmsmas.com and www.qmsmeds.com. To discuss more about the company, we have with us Mr. Mahesh Makhija, Chairperson and Managing Director of QMS Medical Allied Services Limited, Mr. Kaushik, Director Sales and Marketing, Ms. Kinjal Shah, Marketing Manager, Ms. Sejal Mahatre, CFO of the company, Mr. Chintan, Financial Advisor, and Mr. Saurabh Vij, Manager Investment Banking from the Merchant Bankers. Mahesh ji, over to you, sir.
Good evening, friends. First of all, thank you everyone for joining for the IPO meet. We basically just wanted to quickly run through about what Sunil has already said about what we are doing actually. QMS basically, technically, it was a company which was started almost 28 years back. It was a proprietary concern actually. Post 2017, we became a private limited and then towards a limited actually. That's the journey that we have behind us, almost around 28 years of experience actually in this business. And as what Sunil has said, that we basically are into medical equipment, scientific sales promotion activities, we serve continuous medical education programs, and the CAMPS model which we have started off recently right now. And in this last 4 to 5 years, the journey has been very extremely good. We are very buoyant about all the new product categories that we are adding, the new channels that we are looking into it, the new models that we are looking into it. That is one of the basic reasons actually that we are sitting in front of you actually right now. Today, if I can request you to put on the slides, if you can run through the small presentation of QMS right now. Yeah, that's the date. Yeah, this is the slide. Basically, we have about almost around three business verticals actually. So at more than 600 SKUs, almost around. The basic three verticals of the companies were the B2B business model, the online platform, the education business, as well as the CAMPS, which is combination of both the categories. We have run more than 600 odd products actually, and we're dealing with more than 130 customers actually. And we have an employee strength of 50 people right now. A very asset-light business model right now because we do a lot of stocking and selling, and that's how it operates upon. And the FY22 revenue, it's almost 148 crores with an EBITDA of 18 crores and a post-tax of around 11 crores right this point. Coming to basically the three verticals, let me go more deep into it actually. The first one model is the medical devices and equipment, which is more of our B2B platform actually. There we have, as we said, more around 600 products actually dealing in different categories like from stethoscopes to BP machines to nebulizers to different disinfectant kits, surgical kits. It's almost an entire plethora of basically whatever medical surgical products which are required in the industry. You name it, we have it with us actually, almost actually everything. The second model is the continuous education services, which we basically launched almost around 5 years back. Not technically 5 years back, but it's more effective now, I would say actually. Idea inception came in around 5 years back. These are programs actually which we have a tie-up with an international society called the EACME, which gives us all the entire contents actually, which is they have these tie-ups and associations from leading institutes, from the European Institute specifically. We don't have any great American institutes, but we have a large catering of the European institutes where we get this content and we give these programs to the doctors to enhance their medical knowledge, and in their due practice, it helps them actually in a better way. And the third and the most important thing is which we have launched right now, basically is the patient service programs. These are every company you name it, every doctor you name it, basically the patient is the centric, is the fulcrum of the entire business model actually. So what we do is out here is we have been running a lot of CAMP services actually. These are the things tests which the patient normally would have to go to the hospital to do those tests, like the diabetic retinopathy, the ambulatory blood pressure machine, diabetic neuropathy test, the Holter ECG Holter test. These tests we basically provide at the doctor's clinic or at the patient's house actually. So these are the three molecules actually. That's what we are working on right now. This is a small category of products that we deal into it, from blood pressure equipments to diagnostic machines to ECGs, Dopplers, test scales, thermometers, nebulizers, pulse oximeters, skin staplers, stethoscopes, and a lot. And a lot of consumables also, which you see right now. Yeah, next slide. Yeah. Was during the pandemic time, actually, it made us give a lot of thinking, actually, like medical equipments, either it comes from a lot of multinational companies or it is largely dominated by the Chinese market, actually, which made us think right now, we're keeping our Prime Minister view of Made in India, actually. So we found out n number of companies who have a good quality, manufacturing capabilities, which we converted. And the problem was there that these guys could not reach to the market in the right way, actually. That's where we helped up. Just to give you a typical example, pulse oximeters in the last 2 years during the pandemic, it was sold at a price point of almost anywhere from 800 rupees to 3,500 rupees. We are the first people to introduce our brand name into our brand name at a much affordable price point of almost around 370 to 400 rupees actually. And all these products are manufactured at a plants which are all actually US FDA approved plants actually. And based on this same model, we launched a number of products right now, from thermometers to blood pressure equipments to nebulizers. And all these things are actually quality approved by leading institutes, Indian institutes. So we have all these necessary certificates and all for all these products actually. Which is good. This is one of the growth drivers of the next in future life. Coming to the continuous medical education services, which I explained you, we do a lot of content. We get a lot of content from, you see the logo of EACME. We get a lot of content from these, and we make a lot of different type of postgraduate diploma programs. We do a lot of webinars, live seminars, best of global conferences actually. Our larger objective is out here is to educate the doctor and keep him upright with all the latest, medical education system which are going out to help him in the better diagnosis on the patient. Next slide, this is already complete. The patient service programs, I think I said that this is the portfolio of products that we have. This is a smart cardia Holter ECG, which is a continuous monitoring ECG, which we do it at the patient's house or at the doctor's clinic. And this is kept for almost 3 days to 7 days, depending upon the need of the doctor and the patient actually. We have the same, we have the contact APPM machines. We have Carl Zeiss Viscot, which is the fundus camera, which is used to get the scan of the eye, which we basically the first instance of diabetes or the blood pressure is always on the retina of the eye. So you have a lot for these basic tests, the patients actually don't come to know also whether they are affected by that until the damage is done. With this, it helps the doctor to diagnose the patient properly, treat him by a better way actually. These camps are conducted again, as I said, at the doctor's clinic or at the patient's house. We have killer thermometers, which are help for glaucoma. We have BioSense HbA1c check machines. We have VibraSense. These are diabetic neuropathy products. The lipid analyzers. The Sonnet 3000 machine is a BMD machine. The Freestyle Libre is a CGMS product basically. And creatinine tests and hemoglobin meters. These are some of the portfolios which we have introduced right now. And we are going segment wise right now. Right now, the primary focus obviously was on the lifestyle disease category, the cardiodiabetes and the ortho segment. We would slowly introduce in every segment category of the gynecology, the pediatrics, each and every segment, the respiratory segment, where we are in the discussions for a lot of things actually for what tests needs to be conducted. That's me with an experience. Yeah, almost 30 odd years experience that we have in this field. Coming to the industry overview. The medical market, as it is being suggested, is supposed to be increased to almost 50 billion by 2025. At this moment, it is right now, it's almost in the category of 12 billion, and India is the fourth largest Asian medical devices market after Japan, China, South Korea. And as I said, a lot of products basically were imported out there. So 70 to 80% of the product categories were imported. So we trying to find out a niche actually to get products or get in license manufacturing capabilities so that we make in India and sell it at an affordable price for a good quality product. Regarding the financial overviews, I will request Chintan.
Sure. So, as far as financials are concerned, the company clocked healthy growth from over last 3 years, from 70 to 73 crores. The company's reached a top line of 146 crores. As the turnover has increased, so has our margins. With EBITDA growing from 9.6 or nearly 10 crores to 17 crores and maintained at 17 to 18 crores in 22. So, as you would know, FY21 was a year of COVID, so there were good, healthy margins. But what we've reached in 22, we look at sustainable numbers 22 onwards. The net profit after tax of 6.35 and to about approximately 11 crores since 2 years, the company has been maintaining. Coming to your balance sheet and the financial metrics, what I would like to highlight, you can go to the next slide, please. What I would like to highlight is that the company has continuously grown and reinvested profits back into growth. So that's what gets helped us to get a net worth from 9.5 crores in FY20 to nearly 31 crores, with a 3x jump in our net worth. The company has minimal long-term debt. It's only a small long-term debt, which was the COVID loan that was given by banks. Otherwise, only working capital debt is being used by the company to fund its operations. And like I said, all the money that has got generated over the last 2 to 3 years, everything has gone back to fund our cash flows. The company has short-term borrowings of 30 crores as of FY22. And otherwise, even if you see on the asset side, on the asset profile, most of our assets are current assets, which are run in the working capital for running of the business. And that's on the financials front. If you can go to the next slide, I can explain some ratios. Like we said, total revenue trends are seen. The EBITDA margins are for FY22, we have approximately 12% or EBITDA margin, which 12 to 13% is something that the company has always maintained. And EPS, considering the effects of the bonus, so post all bonuses, the company had an EPS of about 9.5 rupees per share as we go into the IPO. Can we go to the next slide, please? Yeah. So the return ratios, return on equity, return on capital employed, though from the 67, 68%, what was there was because of the lower base, the small capital base that the company had. However, going ahead, we expect to have the healthy 30 to 35% return on equity and a 25-27% return on capital employed ratios, which is healthy and which is considered sustainable. The debt to equity ratio has been presented here, including short-term debt. Like I said, we don't have any much long-term debts. On a long-term debt, we are nearly debt-free, and debt to equity ratio, considering total debt, we stand at 1.03. And all of this is working capital debt, so we expect this to come down as from the IPO proceeds. And out of the share that is being offered for the IPO, we have a 27.5 rupee book value. So in terms of customer concentration, our top 10 customers typically do contribute to about 90% of our turnover, which is now coming down. So if you see in FY22, that has come down to 86%. And with the diversification of product portfolio and with the customers that are getting moving, we would want to make this as a better ratio. We would want to go to Saurabh to explain the IPO that we're going to have.
Yeah, thank you. So this IPO is for 47 lakh shares. So out of which 28 lakh shares is a fresh issue, aggregating to around 34 crores. And offer for sale is for 19 lakh shares, aggregating to around 23 crores. So out of which market maker portion is 2,36,000 shares. And then balance is for retail and non-retail portion. So this is briefly the IPO.
Thank you.
So, anyone wishes to ask the question, they can type in the comment box. We will be answering question one by one. Anyone wish to answer the question, they can type in the comment. In the meantime, we'll start with the Q&A with the questions that we have already received. The first question is from Mr. Digvijay Raka. QMS Medical is selling other manufacturers' product. How do you provide guarantee for those products when you sell them under your own brand name?
Okay. See, QMS, when it sells the products of other companies, the warranty is provided by the company directly to them. And when we are selling it under our brand name, we provide them. As simple as that.
Okay. Next question is, what is the industry size of medical equipment of your area of presence?
As I said, that the industry size of the medical equipment is almost $11 billion at this moment, and the segment which we are catering to B2B at this moment is 7,000 crores. And we are practically doing only approximately 120 crores in this.
Okay, thank you. Next question is from Mr. Ramesh Kaushik. How much revenue generated from your top clients?
As it is suggested, almost it's a whole simple formula. 80% of your business always comes from your top 20% of your clients, and practically the same ratio is continuing in our business also right now. If you see that, absolutely. In the FI82, it's like 86% almost right now.
Okay. So which product equipment has been sold majorly in FY22?
We've been selling nebulizers, we've been selling the stethoscopes category, we've been sold pulse oximeters, hand sanitizers. These are among the top categories of products which are being sold.
Okay. So next question is, what will be the impact of lot of smart devices like mobile and watches are coming? How you will compete with them?
Okay.
I think
See, Kaushik would like. Kaushik would be the right person to answer this on this question.
yeah.
See the devices. The devices that we are currently we deal in the market are it involves the latest technology. Okay, most of them are based on IoTs, and if you really look at it, the mobile parameters which are being made, those are all based on algorithm. Okay, whereas the devices that we are selling, those are clinically tested and has been designed for the professional medical professionals. So there is a variation in the readings. So the mobiles, watches and all, whatever the readings you get, those are all algorithm based, and the ones which we are selling, these are all technically, professionally, and medically tested by the and then it has been given. So there is a difference.
Okay. Next question is from Vignesh Ahuja. Who are manufacturer of your products?
We have an NDA signed actually at this moment, so we'll probably not be able to tell them the names of the people actually. And These plants are, as I said, US approved manufacturing plants. A lot of them, two of them are in Mumbai itself, two in Delhi. So we probably, the names at this moment, we won't be able to share the names.
Okay. So next is why PAT declined during FY22 despite growth in revenue.
Yeah, I'll tell you this answer. Basically, no big Chintan is there, but there was a lot of cost increase in the freight actually during those times. So there was a phenomenal increase of almost around, there was, if we can do the breakup and all, there's almost to a tune of 1.5 crores cost increase actually in the freight due to the lot of problems going around this in the segment actually in the China and all these other places. So that's probably impacted the the profit actually.
Okay. Is QMS into exporting? If yes, then which countries?
No, not at this moment. Not at this moment.
Okay. The next question is from Anandi. How do we see EBITDA percent going forward over the next 2 years?
Over the next 2 to 3 years, we considering the proceeds from IPO, and we will be better utilizing the funds because they'll be own funds. We see the EBITDA margin improving approximately 1.5%, and maximum 2% year on year. So that's what the guidance we can provide. We had an EBITDA of approximately gross basis 12%. So 1 to 2 year in percentage increasing trend is what you can look at in the next 2 to 3 years.
Okay. So next question is who are your main end customer? Can you name a few?
We would not be in a position to name them at this moment. We as we are working with the top people in the industry, the top pharma, the top one of top hospitals, the top retail channels. That is all we can say you at this moment.
Okay. What will be the promoter holding after the issue?
It'll be 73.67%. That is the
Okay.
maximum permissible after the IPO, approximately.
Okay. On which online platform QMS equipments are available?
Online
We
platforms.
we have it on Amazon. We have it on our online platform QMS as well as QMS Mass Pro.
Okay. How much COVID revenue was in FY21 and FY22? Basically, COVID related revenues.
See, it's very difficult to say that because the product categories anyway which we've been selling for almost 28 last so many years, it's been the same category and we've increased that. All these products anyway fall into the COVID category. You cannot get COVID has been there right now for the period of a year itself. So if these products, so it's been there for years. So how do I bifurcate and say that it has been there right now? It's I've been selling a sanitizer 15 years back also. I've been selling a sanitizer now also. We've been selling the mask before also. We've been selling it now also. So it's there. If the growth only can signify that. That's all I can say on that.
Okay. What is the basic raw material for the production? I think if you can
Uh,
answer.
we would not be able to answer that because we are not the end manufacturers ourselves. So we basically get a third party manufacturing done. So we were not the right people to answer this.
Mhm. What is the industry growth see you have seen in last 2 years?
See, the B2B segment which we have been seeing is almost running at a growth of around 11 to 13% in the last 2 years. And the medical equipment industry moves at the price of almost around 18%.
Okay. Uh, this we can skip. Post issue, how much debt will go down?
Like I said, we only have working capital debt. So, post issue, 27 crores has been allocated towards working capital. So, in order to better manage working capital, definitely it will go down significantly, but it really depends on how the industry goes. So, immediately post issue, yes, there'll be a significant reduction. We have very minimal debt left. But as the company grows again, working capital debt might come back. But there are absolutely no plans to take any long-term debt.
Okay. Uh, Paresh Javeri asks, what is export presence of QMS that we have already answered? Uh, Next question. Why there is OFS in the SME, usually growing company, people don't sell out. So,
Yeah. So the OFS here is basically to cover certain personal family-related expenses or commitments that Mahesh ji has only one person, and he is very much fully committed to the company. Like I said, we've not sold anything more than what is legally permissible. We will still be holding a significant 73.67, so nearly 74% chunk of the business. So we're definitely not cashing out, but it is for some personal reasons that the OFS had to be done.
okay. Revenue and margin growth in next 2 to 3 years.
So while the industry, like Maji said, grows at anything between, depending on the category, between 12% to 18%, we, being the organized, very large organized player with the background, we look at a revenue growth of 20 to 25%, a little higher than the industry, because we tend to capture a lot because of the strength that the company has. Like I said, in terms of margins, we wouldn't want to overcommit anything, but definitely between 1 to 2% increase in margins is every year we would expect, and this is typically driven by better utilization of funds availability. If we have good working capital, we can definitely negotiate better contracts with our suppliers and better service our customers, which will lead to margin expansion.
How is the response on your online portals?
The online portal has been just recently started. We have not yet been, pumped that much amount of money and resources. It has been a decent amount of inquiries, decent amount of leads that we keep generating. So I would say a very satisfactory response because it's just being launched actually. As I said, these are the future growth drivers actually. So probably in the next 6 months and all, we would be able to give you an exact answer on that actually. These will be just launched actually.
Okay. Uh, Next is, how much is imported from China? What is the market size that will be free once the Chinese equipment are restricted?
We do import almost to a tune of at least 15 to 20 crores worth of material from China, actually. And the market size is huge. As I said, 70 70 65 70% of the products are basically imported from China. And in our category, it opens up a large window actually of opportunity if the Chinese. And anyway, a lot of products will be restricted right now because come November onward, there is anything which you need to import which has to be registered from the CDSO with CDSO. All the imported products has to be registered not only by the person who is importing, but also from the parent company also, which is selling those products actually. So a lot of bygone people like IRMs type of small companies also will get restricted from China also will come. So yes, that's where we see a lot of growth opportunity. That's the whole concept of introducing our own products, Q devices in the market. That's again one of the growth drivers of the three platforms that we are looking at actually.
Okay. Please explain in detail your training course as well as business of organizing camp. Is this beneficial in improving your trading and equipment business?
Yes, I could say that answer on that thing. what we basically do is we get the doctors actually who come on the portal, who do the lot of training models actually, whether it's given by the corporates or it is given by us actually. A lot of training courses happens on this. Our end customer, when we do a lot of conduct well of camps, our Air Force field officers goes and conduct these camps in the doctor's clinic actually. And once we have built up these rapports, obviously, we will definitely, the doctor also would like to buy these products from us actually. So we will be in a better position because we will be capturing, we will have that reach to the doctor actually. So it will definitely help in, of our business actually of medical equipment also. That's a very valid question actually.
Yeah. So, has any manufacturer ever stopped supplying to you before?
I would very proudly say a lot of manufacturers want us to supply. So nobody has come and asked us to stop. Everybody wants us to do their business. Nobody has come and stopped the product category for us actually, which we can very proudly claim till right now.
So, next question is from Mr. Prem Singhana. What is your strategy on brand strengthening?
Strategy on brand strengthening is absolutely the CAMS models which we were talking upon. That is where we want to increase our brand strengthening from that. The Q devices, actually, that's what we are doing, and we're going to go a lot on the SME and the platform for the online business models. That's how we're going to build our brand strengthening on these sides.
Where do you see your company in next 5 years down the line?
5 years down the line, we definitely want, as we are very proudly in the distribution segment, so we are one of the leading distribution companies, and will definitely continue to hold that business model also. The service segment that we have entered, that we want to capture in a very big way. That is where in the next 5 years right now we are on the verge of, having, there are basically 280 locations across the country where we want to focus on every location. Camps to be conducted at every location across the country. That's where the category of business will come down. I mean, grow up from there actually, and the online platform, not the online also, as well as the retail business segment also. So these are the focus areas where we see ourselves in this next 3 to 5 years. I mean, numbers point of view, as Chintan has always said, we are looking as a 20 to 25% growth year after year. Actually, that's where we're looking, and that has been consistently our record for the last 28 years. Actually, though the first initial years were proprietary concern, and then post 2017 is the figures which we have all seen already. So we've been consistently growing at that rate, and we want to continue to grow at that rate. We don't want to overcommit also unnecessarily, but whatever is there, these are the facts. Actually.
Okay. Uh, can you please give us a track record? I think we need to. How about this? What is the impact of China ban on our industry? Is manufacturing unit have started core products production in India?
See, I'll tell you, the impact will be big, but it is just minimized right now. Though the certain product categories we are manufacturing, but there's quite a good amount of end material products still gets imported from China also till now. So it's a long run. It cannot happen immediately. It will take it will take time. But it is somewhere, you have to start somewhere actually.
Hmm. Next question is from Supriya Research. Do we need to follow regulatory restriction while trading in medical equipments?
There are a lot of restrictions coming in right now. The new one also will be coming. There are the fixed MRPs, there are fixed dealers prices, there is a drug license policy. All these regulatories are there. Patent measures are also there. All these regulatories are there in place, and it is there from years and will definitely continue. I mean, better systems are coming right now. And right now, which I said, registration of product with the CDSO is also compulsory. That is something which is going to be the game changer in the industry actually,
Beneficial for
which will be beneficial to us actually in a better way.
Okay. Next question is you are raising fund for working capital. Can we assume the company expects exponential growth in next 2 to 3 years?
I would love to have that, but at this moment we are just committing ourselves to 20-25%. We dil mange more always that say, but we are going, you know,
Fingers crossed.
slowly and steadily.
Yes. Uh, no. Say, can we have a name of some competitor if possible?
I wouldn't. I wouldn't, honestly speaking.
Sure. Uh, can you give more understanding on CME and CAMS?
See, CME is basically, every doctor needs a continuous medical education actually. There are certain states which have laws where the doctors needs to collect those credit points actually to renew his license also actually. So and that is one segment. And the other segment is a lot of international content actually, with the doctor normally as an individual would have been difficult for him to go and study out there. So we as a company give it actually on a platform there. We collect the content and give it to them, and they come on the online platform. We have live webinars on that. So that's where the education content moves in actually. The CAMS model, as I said, it helps the doctor in retaining the patient, servicing the patient, as well as diagnosing the patient in a better way.
What are the payment terms with the clients?
We get normal industry terms of 60 to 90 days,
Okay.
and the purchases are majority 100% advance.
Mhm. As you say, market size is huge. Which all products we are importing in your segment? Why you are not manufacturing?
See, we are slow. We do not have the personal capacity, which it's not in our DNA to get into manufacturing. But yes, we have identified a lot of manufacturers who have a good spare capacity, but do not have the right approach to go to the market. Actually, as we suggest, our strength right now is we are a distribution and a marketing company most strongly, where we know how to build brands. Actually, manufacturing, yes, there are enough good people in this industry in India who are doing that. And yes, it is not yet, these people also are not yet reached to a level where China is right now. So it's going to take slowly, steady time. It cannot happen overnight.
Okay. Uh, Sir, as you mentioned about the training to the doctors and selling the product to them, so do we charge for these trainings or courses, or these are free and for educational purposes?
There are both. There are free and education also, and we charge also. There are both. There are both.
Okay, okay. So next question: who owns the data from the camps? It will be yours or of the company or doctor which had appointed you.
The data is both for us actually. The doctor when we give him a consent, he signs a consent on that. The data is with us. We help him publish the data, help him study the data actually. So data technically is owned by us, and we cannot go to the company anybody else.
Okay. Is there any NPA in QMS, or what is the percentage of NPA of total sale? I think bad debts.
Negligible, not even anything right now. Not to my extent knowledge. We don't have any NPAs in our business.
Okay, okay. So for how long we have the relationship with our top 10 clients?
As I said, we started our operations, though as a proprietary concern for 28 years, and I can very clearly say it's been there with all these customers for almost more than 15 years at least. I can say.
Okay. Uh, Last year EPS was 31 rupees. Even on post IPO dilution, EPS would be around 15 rupees. IPO is priced at 121. Why so low valuation?
I love this man.
So correction, FY22 EPS post dilution is about 9.5 rupees, and we are very happy that you consider this to be low. The pricing has been determined in consultation with the merchant bankers, and the whole idea being that we are here in the long term. It is in the investor's interest. If investor likes our company and they earn from our company, they will be with us for a long time.
Okay. Uh, was what's your vision for the company? Where you want to see this company?
See, our vision, as we always say from the numbers, I'm not talking about the numbers point of view. It's basically to serve the people, get an affordable product at an affordable price. That's what our longer aim is actually.
Okay. What is the current employee strength, and what is the needed for what will be the needed for growing the business in all category? Also, how much that would be as a cost of sales?
Yeah, at this moment we have a current employee strength of 50. Pertaining to the CAMS model, which we have been talking about, we would require almost around 200 people across the country right now. And would in cost of the sales point of view, because that will not only be point the employee point of view will be very negligible, but because the cost of the equipment would be very high. As I give you a typical example, if per zone, if I have to open per person, if I have to employ in a place, it will cost us 15 lakhs rupees, keeping in mind the different equipments that we have to go put in the camps along with that person. Like a diabetic retinopathy machine costs around 5 lakhs rupees. And ABPM costs less actually, but then BMD machine costs around 5 lakhs. So our consolidated package per person, per employee would be around 15 lakhs. So if I have to employ 200 odd people, my investment itself will be almost around 30 crores in that. And we have quite invested almost 50% of that already right now in this actually.
This will happen over a period of
Which
time.
will happen the balance will happen in another over a period of 2-3 years, like 2 years, maximum 2 years.
What is the portion of own products versus third party products in your revenue mix?
See, own product percentile is very minimum right now. It's just being started in the last 1.5 year. It just contributes, I think, to not only 4.5 to 5%.
Okay. What is the average salary per person?
For different categories, different people right now, actually, from a fuel who starts with 15,000 to, I wouldn't say Toshik's salary right now. So it varies because a lot of incentives are involved, a lot of fixed costs are there, a lot of variables are there actually. So it could anywhere between 25,000 to 25 to 50, 40 lakhs actually. Different posts, different category people.
Okay. So this is some interesting question. Can you quantify value of counterfeit products that are there in the market?
See, in our segment, it is the counterfeiting is more on the pharmaceutical side actually than on the this product category. It's equipment category counterfeiting is very it's difficult actually. The pharma segment, yes, medicines and all, you will find a lot of counterfeiting and all, but not in our segment, not in us. Not much has come to our knowledge, honestly speaking, at this moment.
Okay. Okay. Uh, so yeah, what is the total number of SKU that we have?
600 plus. 600 plus.
Okay. Okay. So anyone wishes to ask any questions, they can put it in the comment box. So that was the last. We'll wait for the 1 minute. If someone has any questions, they can put it, or else we will close the meet. Yeah. So there is. What are some roadblocks that can hamper your growth?
Lot of roadblocks would be, at this moment, I don't foresee any major roadblocks at this moment, honestly speaking. Except, I don't foresee technically as such anything other than that. There's no major roadblocks actually.
Okay. So top 50 SKU revenue.
Again, it contributes the same thing. About 80% of your category percentile comes again from your 20% of your product category. The same ratio holds out here also. So again, if you could say almost one out of the 120 odd crores, it's you know, exactly almost 80% of would be coming from the 20% of the product category itself only.
Top 100.
Okay. Okay. Mm, I think they wants to write peer group for
I,
product.
as I said, there are a lot of fragmented people, but nobody, honestly speaking, comparable to our size and what type of work that we are doing at this moment. I wouldn't like to name anybody, honestly speaking, on this.
Okay. Okay. Once again, the question related to risk that we've already answered. Anything you would like to add here?
Right. So any risk factors will what I say that.
Uh, no, so see, there are specific there are external risks which all business generally would have, which anyone in India would face, may it be government policy or some difficulties in the political scenario, which would in turn affect the whole industry. Those are the same risks that we have. But considering the current business model and the trajectory that we are in, we don't see any risk specifically on our business. We are not over leveraged, nor are we reliant on very a focal thing that okay, if this happens, only then we will grow, which is not the case. We are quite well spread in terms of risk management. So I wouldn't see any specific to QMS risk to this growth. But if there is any event which affects everyone in the industry, that's an external risk. We would definitely be exposed equally as anyone else is.
Okay. I think we are done with our questions. Just there is one more question.
Sure.
There are promoter group with similar object as mentioned in the risk to the issue. How do our product
Compare.
compete with this? I think this person is trying to PR and it's writing promoter. Product compete with those.
I did not understand this question actually. There are
Yeah.
problems.
Yeah, I'm also getting confused.
I think what he means is any the other group companies. If that is the case, then what QMS does is what QMS does. There are direct. There is no risk of any business getting transferred to any other promoter group.
Yeah, maybe.
So what happened is that promoter group might. I'm not sure what they exactly mean, but earlier we were running a proprietorship concern, which is shut down now. So everything happens within QMS.
Okay. Okay. One more question is there. What moat makes our company, as you mentioned, one of the biggest player in the industry?
What makes us it's
What sets us apart from
what sets us
competitors?
apart is obviously the way we identify the business, the way we satisfy our customers' needs, the service that we provide to them, the concepts that we give in the industry. These are the it is technically speaking all the basics actually, whatever for a business, but how you implement these basics in the right way actually. That's all it is. And we till now touch would have been doing been implementing all these basics in the right way.
Okay. Okay. I think we have answered all the question. The promoter answer was the correct one. The person is not right. Thanks. Yeah. Uh, so this was the last question. So thank you so much for the joining in. I would like to thank the Mahesh ji and his whole team to spare the time and give the insight about the company and the industry to the investors. Thank you so much, sir.
Thank you, Sunil. Thank you, everyone. Thank you.